Banks in Australia are a big play. A lot of retail investors hold a fair amount of banks and they never want to sell because of the tax implication. But the reality is banks are going to struggle. They have diversified most of their earnings. They're basically a property play. So property will struggle for the next couple of years. Everyone's a property bear now, so that's pretty much consensus. So you would assume that the bank's outlook will be weak and bad debt provisions will have to rise. They've had the benefit of cutting bad debt provisions to get upgrades. Now they will have to reverse all that. So I suspect banks will continue to fall from here. They're pretty boring when the property market's not doing much. So they'll struggle, property will struggle, and most of the consumer spending related sectors, they're going to have a tough cycle over the next 6 to 12 months.
Mathan, it sounds like the RBA is trying to use the same playbook as the Fed. I mean, they're trying to drive up unemployment, bring down inflation, but to what extent do you think they will hike as aggressively as the Fed? And what does that mean for the Aussie dollar?
Yeah, this is going to be interesting because commodities are weakening. We've had iron ore now fall from 140, 150 down to 110, 120. So there's a fair amount of pressure coming out of commodities that's already weighing on the currency. Now, if the RBA does not follow the Fed, the yield differential will put more pressure on it. I think they will. I think RBA will be slow. RBA has a much bigger property bubble than the US Fed. So Fed can go harder and they need to. They've got a midterm election and they need inflation down well before that. So they'll keep going hard. I don't think RBA can keep up. I think RBA will be much slower. I think they'll probably be doing maximum 50. Even though they should be going even harder, I don't think they will. And so in that context, I think there's much more risk for the Aussie dollar to go lower, which is not a good thing for our markets because global investors, if they see currency risk, they tend to dump it down and run away.
How much lower, quickly?
Well, I think you can get down to the low 60s here because when you don't have the commodity support and you don't have the interest rate differential, then currency tends to drop to the low 60s pretty quickly.